The following hedge fund video has been brought to you by the HFG. The hedge fund group provides premium service, along with online training and certification for hedge funds, called the Certified Hedge Fund Professional, also known as the CHP designation.
Hello, this is Richard Wilson, and today we're going to talk about the history of hedge funds, or the history of the hedge fund industry. This is a topic which is often confused with the term hedge fund and what makes up a hedge fund, especially with people that work outside of finance. Most people in the financial industry have a pretty good grasp of what hedge fund is or is not, but people who work just in business or in journalism or media or other areas are often confused by what would make a hedge fund versus something else. So the history of a hedge fund can kind of clear that up. So first off, in 1949, there was a person, Alfred Jones, who was a journalist. He was also an author and sociologist, and he basically started the first hedge fund. What he looked at was the performance of securities in the broader markets, and he looked at how he could pair trade or match some short sales with long sales of stocks to kind of manage risk within a portfolio. And so in a very literal sense, he was hedging his investments. He would invest in Intel but short AMD or something such as that. And so that's how the term hedge fund came to be. What happened next was that this kind of method of investing became popular really not till the 50s and 60s. And in the 1970s, it was recorded that there was 150 hedge funds in the industry, probably more if you counted really small ones, and there was also close to $1 billion in assets, which is very small compared to today. Depending on what source you go to, there's between $1 trillion and $2 trillion in assets in hedge funds, so an enormous industry compared to $1 billion. To give you an example, just last month, $14 billion in new capital was invested in hedge funds, which means besides withdrawals, there's actually a $14 billion increase in total capital in the industry. So just last month it increased 14 times more than it was in the 1970s. Some of the earliest hedge fund managers were Warren Buffett, George Soros, and Michael Sternhardt. And since hedge funds were first invented and since the 60s and 70s, they've evolved. And instead of a hedge fund being a fund where a portfolio hedges their security investments, a hedge fund has come to mean a private investment structure which charges both a management and performance fee. And that performance fee is really key to making something a hedge fund, because a mutual fund might charge a management fee, an ETF might charge a management fee, but the performance fee really kind of aligns the hedge fund manager's interests with the investors. So another important thing to remember is that hedge funds now can include commodity investments, bonds, real estate, patent portfolios, commercial financing, currencies, foreign exchange. Really, it can include almost anything, and that is why hedge funds have grown to such size. They include such a broad spectrum of investments, and the term is used so loosely that the hedge fund industry is now enormous, whereas a term like private equity, although it's expanded in various types, is more concentrated. It's just one of those terms, hedge fund, that's just been used more frequently for more types of investment structures over the years. So that's led to some confusion and some very large growth. And some of the confusion around the hedge fund industry has also been created over basically two reasons. The first reason is that in many places, such as the United States, hedge funds are restricted in how they do their public marketing and how they perform public relations. They can't do most types of direct marketing as a traditional company could, because their investments into a hedge fund are mostly restricted to accredited or high net worth investors and institutional investors. So that just leads to some confusion, because many hedge funds are scared to do any educational or marketing efforts, and they're restricted from doing lots of types of marketing and public relations efforts. And so that is one source of confusion in the industry. The other source is really just out of competitiveness. The hedge fund industry can be very lucrative for a fund manager or a professional in the industry, whether they're raising capital or managing a portfolio or being an analyst. It can be very lucrative. And the result is that knowledge is power, And knowledge is a hedge fund professional's greatest asset. Knowledge about an investment process, research, risk management, fund operations to a hedge fund is their most valuable asset. And if somebody else has all of your knowledge, they can quickly copy everything but your track record and maybe some of your team pedigree. And so it's actually a very valuable thing to have unique knowledge and a constantly growing set of specialized knowledge within the industry. And because of that, hedge fund managers are not likely to give away that knowledge in the press. They're not as likely to write books. They're not as likely to consult with other hedge funds. For example, Jack Welch, after leaving GE, spoke to many different companies and is on the boards of many companies and has written books about his practices. And you don't find that as much in the hedge fund industry. When a hedge fund executive retires, they either have so much money that they don't care about doing those other things, or they're on the board of a few hedge funds which pay them very handsomely, or they go and join as a strategic advisor to a very large hedge fund and they serve that one hedge fund. Typically they're not out giving speeches everywhere, writing 6 or 7 books, going on to Oprah, doing interviews with the media all of the time. It's just more of a competitive, very knowledge-centric industry. And so that can cause some more confusion. So I hope that helps with a general overview of the history of hedge funds and how it moved from being a hedged portfolio to being more popular in the 60s and 70s and being more of a management performance fee combination that made up a hedge fund. And then also how it moved from being $1 billion in assets just in the 1970s, 30 years ago, and now, we're just last month gained over $14 billion, and depending on who you ask, there's $1 to $2 trillion in the industry. And then we covered the 2 reasons why hedge funds are a little bit confusing or hard to understand, and that is the first reason about the laws of hedge fund marketing and public relations. It restricts them, and second, it's a very competitive, knowledge-based industry. So I hope this helped with your understanding of hedge funds. If you're completing the CHP designation, this is important information to know. If you work in the industry, it's probably something you at least already partially know, but hopefully it helps. Thanks for your time.